Well, it's not looking so hot today. AMC is down about 6%, and the Santa hat is not bringing us any good luck, but eventually it will. Now, let's get into what is going on today. There's a lot of data that is coming out. The FOMC meeting's at 2 p.m. Take a look at this guy's beautiful face. If you do not know who he is, you are about to find out. That is Fed Jerome Powell. That is the guy that makes the money printer go burr, that gives you monetary policy. Not fiscal, that's going to be your Congress, but he's the guy that's been supporting the markets this whole entire way. Now, today at 2 o'clock, the FOMC minutes come out, and then at 2:30, he is going to be speaking about economic growth, what they see for inflation, possibly interest rate hike increases. So I'm going to give you guys the scoop on the expectations about this, which is going to move the markets. Hopefully he can swoop in and save the markets, as well as that we did get some incredible numbers today about the job growth. So hopefully Powell saves the day. If he does not, we're going to also go over where we are going to go with AMC next. So drop that like on the video, consider subscribing to the channel, and let's get into it. So AMC today down about 6%, give or take, at the time you guys are seeing this video. We could have bounced up a little bit, or we could have sold off a little bit more. And it's been pretty much like a waterfall, just straight into the ground. And we're at $24.06 per share right now. I said in the live stream last night, I said in the video yesterday, that it wouldn't surprise me if we fell to about $23 per share. We are finding the sell-offs a little bit slower. So we did close yesterday at about $25 per share, give or take. And now we're only at 24. We did go down 5%, well 5.5% as of right now, but we're not seeing a super fast sell-off. You're not seeing 10%, you're not seeing 15% down days. You're seeing a relatively slow sell-off. Now, $23 per share, I expect to get a lot of support around that. And people are talking about AMC going back to $16 per share or all these crazy prices. I think it's going to be very hard to get enough momentum to see a big break under 20. I think if we do go down to 20 for whatever reason, which it's going to be hard to push us down to 20, but if we do, you're going to see a lot of support kick in, just like we've seen back here December 14th, and you're going to see a bounce at those levels. I wouldn't put my money on going down to $20 per share. I'm hoping Fed Jerome Powell comes in and saves the day. So what's going on? The Fed minutes. This article is from today, updated January 5th at 8:21 a.m. Fed minutes could yield clues on interest rate liftoff and balance sheet reduction. Yeah, so that's going to be key too. The balance sheet reduction. They've been buying all these treasury bonds. So if they stop buying the treasury bonds, which they are doing, and they start selling treasury bonds, then that means the bond yields the situation that's making tech stocks sell off is going to get worse because they're selling the bonds go down, the yields go up. And that's obviously could push us even closer to a recession. And it says, at the same meeting, which ended December 15th, Fed officials retired the word transitory in reference to inflation and signaled they may raise interest rates 3 times this year, a more aggressive pace than previously telegraphed, even as officials marked down their economic growth projections. When the Fed minutes drop at 2 p.m. Eastern Time, investors will have a chance at more insight into policymakers' latest debates around the economy, interest rate policy. Here's what to watch. The post-taper, the assets, what they're going to be doing with these assets, gauging growth. What does the Fed think the economy is going to grow this year and possibly next year? And then we're going to get his actual words at 2:30, his actual speech, and then people are going to ask him questions. And that's going to be key. Usually you get a big response once this comes out at 2 p.m. And then you also get a response because of the questions that he will be asked. So keep that in mind. That's going to be key, and that's the main focus point of today. Fed Jerome Powell is either going to save the markets or make them a whole hell of a lot worse. Now, As far as the other news that you guys need to know, private jobs growth totals 807,000 in December, more than doubling expectations, ADP says. If we take a look at the key points, private job growth totaled 807,000 for the month, well ahead of Dow Jones' estimate for 375,000 and the November gain of 505,000, according to ADP. Hiring was broad-based, though leisure and hospitality led with 246,000 new positions. Businesses with 500 or more employees accounted for a bulk of the gains in December, adding 389,000 jobs. This is a good thing and a bad thing because more people are getting back to work. Obviously, that's a good thing overall. But the Fed has said that they will not start raising interest rates aggressively if job growth starts to slow down dramatically. So when you're seeing a lot of jobs created, it's more confirmation that the Fed is going to actually raise interest rates. They're projected 3 times in 2022. Who knows if it's going to happen? We're going to get more clarity at 2:30 and 2 o'clock once the FOMC minutes do come out, and I will be sure to bring you guys that information because that's directly going to affect AMC. If Jerome Powell comes out and basically reiterates the same things that we're expecting or slightly starts to tone down his aggressive rate hike verbiage, then you could see a rotation into a lot of these more recovery stocks like AMC, which you're already seeing, mind you. AMC is just so manipulated that even though people are buying AMC, it's still not doing anything for the price of the stock. Investors, they're buying these recovery stocks, and AMC is the definition of a recovery stock as well. Literally the full definition of a recovery stock, and it's not going up. Carnival Cruise Line has been going up almost every single day, and then AMC is down 5 to 6% every single day. Clear form of manipulation. Once that comes to a boiling point, you're going to see AMC go crazy. You're going to see AMC explode. There's going to be so many people with obligations to legal shares that they have bought through their brokerage and no shares available. It's very important that you guys watch the whole video that I'm going to be putting out at about 2 p.m. today. Spent a lot of time on that video going over a lot of key things. Make sure you guys watch that video. That's all I'm going to say. I don't want to spoil it for anybody, but it's going to be very, very important. Now, as far as the actual data for today as well, taking a look at Ortex, 17.13% short interest of free float. Current shares that are sold short of 87.9 million. Cost to borrows, not true. I mean, the cost of borrows, in my opinion, have to be in between 2 and 10% just because how volatile AMC stock is. This 1.35% cost to borrow max is bullshit, in my opinion, so take that for what it is. Share utilization, 75.85%. And then the days to cover, 2.43 days to cover, ticking back up again. This is a ticking time bomb, still remains to be the same. Eventually, AMC will shoot up. The days to cover will shoot down. I got hiccups. Will shoot down. So, very interesting. Take it with a grain of salt. I think the short interest is still in between 40 and 80%. Not too much has actually changed as far as my theory is concerned about that. AMC for the Stock Tracker data, it's looking very, very depressing. 1,800 calls that are in the money. 138,000 calls that are out of the money. Not so hot, but that does set us up for a chance to see a substantial bounce. 46,541 puts that are in the money expiring this Friday, 59,000 that are out of the money. So if we do see a move to the upside, 5-10%, then you could see a follow-on move on top of that because of the amount of calls that are out of the money compared to in the money, and the amount of puts that are in the money that compared to calls, virtually nothing. So that's going to be key. You are still seeing a lot of people buying the January 21st expirations, and you're looking at 508,000 calls that are out of the money on that date, and 102,000 calls that are in the money on that expiration date as well. So it's going to be very, very volatile. I do think we are in for a move to the upside around that time. As far as the max payne, that's the last thing we're going to cover here in this video. And let's take a look at it. Probably, $27 per share. So it's coming down a little bit. but still, that's a quite substantial move from where we are at about $23.65 per share, down about 7% at the time of this recording. Watch that $23 level. I don't really see a break under that, or I should say I don't see a substantial break under that, and I certainly don't see a break under 20, but it's possible. Keep an open mind. That's all I can really say for you guys. The MACD has now started to cross into bearish territory. Not good. The Bollinger Bands, we're far off the 20-day simple moving average. Not good. The other moving averages are well above the Bollinger Bands at this point. We're heading into a big move that's going to be coming, I think, to the upside, but anything can happen, and be prepared for anything. So, doesn't change the overall thesis of the trade. Everything is still intact. You got to expect this shit to happen when you're dealing with such a manipulated stock like AMC. But that is going to be all for this video. Stay tuned on the channel for future videos. Jerome Powell, all the updates you guys need to know. We're going to see a big move, hopefully to the upside, with AMC around 2 to 2:30 p.m. today. Love and appreciate you guys. Thank you for watching. I will see you in the next one.